Hey traders, happy Sunday. Hope you guys are having a great weekend. As always, everything in this presentation is for educational purposes only. We'll lead out here with daily charts on the S&P 500 ETF, the SPY. You can see the December low in the bottom left of your screen. We're up here in the upper right. I'm going to zoom in and you'll be able to see that we're still in this trading range. So here was Friday's action. We were down a little bit, but the highs up there, 302-ish, and then the support 284, 285, something down here in this range. Right now, we're above the 20-day EMA in red, which is about 1 month worth of data, and the 50-day SMA, the orange line, which is the institutional moving average, we're above that as well. Therefore, bulls get the edge walking into this week. If I zoom out and then transition to a weekly chart of the S&P, you can see we're up here. We're above the 20 period and the 50 period. Everything looks good, technically speaking, for the bulls. Now, with earnings or with expiration behind us on Friday, October month is over. Now we're going to get into even more earnings this week and next week as well. And maybe that can be a catalyst to send us up or down. But right now, bulls got the edge. Sticking with weekly charts, if we go to the diamonds, they're still above their moving averages on the weeklies. If we go into a daily chart, you can see here we sit. Again, support, somewhere down there, 256-ish down to 255, and resistance up there at that double top at 273. We're at 267. We're above moving averages. We're range bound, but we're still above moving averages. Bulls get the edge. If we take a look at the Qs on the daily chart, just like the SPY, just like the diamonds, we're above daily moving averages. Then if we look at the weeklies, we're sitting up there near the all-time highs. Bulls, again, doing just fine. We go to the IWM, the Russell 2000. Now, here on the weekly chart, we're getting back above some of these moving averages. However, you can see how 159 to 160 up there is resistance, 145 down here is support. We're in the middle. We're still range bound. When IWM, and I would consider putting alerts up there at 160, we close above 160, there's nothing really to stop us. There's that one candle. The close there was 160.53. We get above there, there's nothing to stop us from a technical perspective, right back up to the highs. That'll be interesting to watch for a potential trade idea. Now, I had some questions on gold and silver. We'll stick with weekly charts here on GLD. On a weekly basis, this is still a flagpole. This is the flag. On a daily basis, here's a high, here's a lower high, more lower highs. The lows are somewhat lower, right? We're getting some support coming in here around 139, 140, trying to hold this up. But with these lower highs, the bears still have the edge on the daily chart. So to answer your question, walking into this week, bears have the edge. It's not very bearish. It's just, hey, we're below moving averages. We have lower highs. Technically, we have some lower lows. We're in a down trending channel. That's why if I go up here, and let's do drawing, let's go grab a trend line, and we do this, you guys get the idea. This is why the bears would have the edge, because of basically something like this. Let's do silver, SLV, daily chart. Similar situation, right? There's that big spike higher, lower highs, lows, here's a low, here's a low. We have some consolidation here. Same story for silver. If we take a look at the silver miners, SIL, same thing, lower highs, lower lows, we're below moving averages. Now here on the daily chart, SIL is just a couple pennies above the 20-day, but we're still below the 50-day. So above one, but below the other. Overall, how would I interpret this? Lower highs, lower lows. And then if we do GDX, George Delta X-ray, the gold miners, here's a low, sort of tied the low, but then we had a new low here, trying to rally back up, but also we have lower highs. The metals and the miners, not aggressively bearish, but they're not bullish. So overall, again, bears get the edge. Taking a look at some individual stocks, here is OKTA, and we're going to look at TWLO. If I zoom out on OKTA, we can see that from January of this year, big move up, 60, more than doubled its value up to 140. When you're watching for stocks and they start to do a trend change, that's probably one of the most common questions I get asked. Stocks that go up for a while, what does a trend change look like? Well, we started getting below the 50-day here, but then we got back above it. We did not set new highs. Then what happened? Boom, you fall right out of bed, you go right back up, hit the 50-day, and you're falling out of bed again. The first sign that there was trouble in paradise here on OKTA is when you start breaching moving averages, and every time you try to get back up and re-energize that bullish trend by setting new highs, and that doesn't happen, problem. Here we break it again, but this time we spend about 5 trading days below the 50-day, whereas over here was only 1. You now see the duration of time below the 50-day getting longer, right? And then, as we come back up, still can't get above the all-time high. Then we roll over. Now we're setting more lows. We're probing, getting lower, but we're rallying higher. Then we just fall out of bed. Now we're coming up here, can't get through the 50-day, and we fall out of bed. So yes, the trend on OKTA here is absolutely turned, but the signs were appearing already in August. First here, then more time below it, can't get back above, then the break. Now we look at TWLO, TWLO, 50-day, 1 day below, back above, couple days below, back above. But here's where TWLO and OKTA are different. We still had multiple days below the 50-day in orange, but here we went back up to new highs. See how that works? OKTA, we couldn't do it. Then we come back down, hold the 50-day. We go back up. Now we're breaching. And instead of it just breaching, let's say 1 or 2 days and then pausing, we had follow through. We test previous lows, natural point to bounce. We bounce right up, but we cannot get back above the 50-day. Then we roll over. We try to get above the 50-day again this past week. And now we're rolling over. Those are just the signs to watch for. So I hope that you find that helpful. All right, American Express, another one, almost in the same boat. Nice rally. We start getting below the 50-day. We get back up, but no new highs. We're able to retake the 50-day. But when you break a major moving average like the 50-day, and then you rally, you want to see new highs. Re-energizing the bullish trend didn't happen. Then all of a sudden, the 20-day acts as resistance in red. And then what happens Friday? We actually gap up, close near the lows of the day, spike in volume. That's bearish engulfing. A close back below the red line, the 20-day EMA will be more bearish, even more bearish for AXP. Further, up here could be a head, left shoulder, take your pick, right shoulder, even over here. This is not looking good. I would say the downside target, if we close below the red line, there's some pausing here at 110, then you start coming all the way back down to December. Not saying it's going to get there, but there's definitely a trend change here on American Express. And I also had a question on Boeing, ticker symbol BA. This stock has really been range bound ever since the crashes happened. But on Friday, there was news reportedly out that they were hiding. They didn't want to tell the FAA things. I'll leave you guys, leave that to you to go read the articles. But apparently there was information withheld, potentially about safety concerns, according to the articles. And Boeing ends up dropping quite a bit, down 6%, $24. Right now the target would be down there around $320. If those articles are not true, then the stock probably is going to go right back up, right? But as of right now, they wanted to sell now and ask questions later. So target 320. So that's it, folks. Wish you guys a great week ahead. Right now, bulls have the edge on the daily charts of the major indexes, and we would want to see new all-time highs for a breakout. And after a multi-month consolidation and then a breakout, that's letting the bulls catch their breath, and that would start a new trend. Let's see if it happens. If not, watch the downside targets we just talked about. So again, take care. Wish you all the best.